Everybody. Just a quick video, actually, just recap, keep things simple. Well done to everybody for an amazing day. Obviously, some of you have done fantastically well. A couple of the comments have been keeping things simple, and that is the number one thing I want you to do to keep it simple. We're going to look just really, really quickly, two things that are going to make you money. So you want to be listening. First one is RSI. Just want to go through just today, picking up random points, what we're looking at, what we're doing. The second one is moving average, how to use a moving average to enter, to take profit, to trade with confirmation. Not trying to pick tops, not trying to pick bottoms. This will help you. So the first thing I want to do is just want to look, recap at the RSI. So all RSI is doing, well, if I give you an overview of RSI is the underlying strength index for the price. So what you will normally see, just pick it random here. Price comes up, down, 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 slight up, down, 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 and then can you see it comes up from the bottom, pull back, up, pull back, up, pull back, and then it does this all the way along. So effectively, price maps RSI or RSI maps price. Doesn't matter which way around it is, but what does matter. Key rule number one is when they don't do the same thing, so they roughly follow each other. If you could map this over each other, they would follow. When they don't, it's a sign of a reversal, and that's what we call divergence. So if price is going up and RSI is going down, price is going to follow RSI. So price will then catch up with RSI and drop. If RSI is going, again, vice versa, it works the same. So I'm just going to give you some live examples from today. This is DAX. Just keep it really, really simple. We've got, here's the first thing. It's got our lovely double dip, which you need to be experts in because it will give you profit. Price was coming down, but RSI is getting stronger. So you think, right, so RSI is stronger, price is going to go up. And again, we come roughly, you've made 322. So really huge income there. So that's what that one trade could have done you all day. £1 a pip, £300, £2 a pip, 600 quid. Thank you very much. I'm done. Took me an hour. I'm out of here. So as we start looking around, we just want to monitor price that are an RSI the whole time. I've got RSI set in 5. I've got levels marked out. I've got 19 and 15. I want to say, right, well, where does it then not tally up? So here, there's a big spike of RSI at this level. So I want to make a note of that. Okay, so there's a note of it. First thing is, this is the price. But what I can see immediately is that price has gone higher and RSI hasn't. So we're going to mark that out. Okay. And I can see at this point, it's coming down. You can get a sell in. Picking up move. There we go. Trough of that move. Big. 100 just under 100. Well, say call it 160. Then again, continues up. Prices continued. We've got divergence here. Okay, match it up. So again, same thing happened. This move might not be over. We'll see where this move goes to. But at the moment, 12,368. 12,246. So over 100 pips. So you're talking that day, if you just did £1 a pip, you'd have made over £700 just doing RSI, just keeping it simple. In the nicest way, predictions about where price is going to go tomorrow, next week, next month. Who cares? What do you want to do? Do you want to make money or do you want to be able to predict the charts? I would rather make £1,000 a day and not know where the market's going tomorrow. Don't give a hoot. And I would rather just make that money. If you tell me, I'll give you the power to predict the charts for tomorrow, but you won't make any money, it's useless. We're only here to make money. We're not here to be Mystic Meg or whoever you want to be. We're just here to make money. So this is just keeping it simple. If I told you that, you'd think, well, why are we not doing that? We must keep trading simple. Forget the news. Forget this bloody Trump, Biden, whoever. We just don't even want to entertain it. It doesn't mean nothing. What that does, when you start talking about the news and start thinking about the news, and I'm guilty of it as well, you start liking to think because it's kind of cool if you can turn around and say, oh, I predict this, I predicted that. No one cares. All I care about is getting a load of money so that I can go and do some good with it. And what I want to do now is to show you so that you can do the same. You can go do some good with it. It just takes some pressure off at a difficult time. So that's the first thing. RSI, all you got to do is remember, price and RSI will map each other most of the time. When they're in the extreme areas, either really high or really low, and then you start getting RSI diverging, might take some time, might take a bit of patience waiting, but the trade will come, and you will make money off it. Today, 600-700 pips. We're not looking at any other markets. This one market, this is DAX. Simple, just keep it simple. Second thing I want to show you is moving averages. So here, how do I trade a moving average? Green moving average is 9. So effectively, what that's doing in any time scale you look at, and this works in all time scales, this smooths out the price, the last 9 candles. If it was moving average 21, it'd be the last 21 candles. I appreciate Jody Samuels talks about 8 in a video, and I'm not going against Jody Samuels, but I just find that 9 is slightly better in the trend. So when you've got price above moving average 9, you're looking to buy. Okay, you'll see here, look, price is going up. Huge moves, 936, 204, and this is what I always have seen people telling you on seminars and videos. Oh, trend is your friend. Yes, get that. Trade with the moving average. Yes, get that. And I say, well, how do I use that to make money? Just tell me. Don't want your theory. Just tell me how I'm going to make money. So they don't tell you, by the way. So go and pay 500 quid a day for a course on moving averages, and they'll give you a load of waffle. I'm going to tell you just how you can practically use moving averages. So I'm just going to start random here. Trend came up, bang, really powerful. You missed that move, deal with it. You've missed it. It's too late. You don't want to chase halfway up. Chasers die first. So price comes back. Okay. Now what you want is for any kind of reversal, and this is what we're looking at here, is ready again for the reversal. You want at least 2, ideally 3 candles to downside. So if price is above moving average, such as here, okay, you're not going to short it here. There's no reason to short that. You could argue, oh, it's a double top, but more often than not, it will just blow straight up. So you don't guess here. What you do is you wait for at least 2 or 3 candle closes, and you want to see how price, once it's fallen through here, you want that retest, and this is where you want to sell it. So for example, in this instance, price comes down, you're looking for some red candles. At this point, you wouldn't enter, okay? You just don't enter. And that's taking some patience then, because price has already come from up here and it's come down there. You've missed that move, you're kicking yourself. And then 1, 2, we've got 3 candles. And that third candle is clearly red. So you'd be looking at this area now. You might even be looking at this area, this candle, because once it's come up, the second candle is rejected, then you've got that second one here. So you might be entering there, okay? You might be looking at this candle and saying, yeah, it's red, solid red, I'm getting in, 12,153. Okay, pricing comes back down, comes back up. And worst case scenario with this one, because again, you've got a 1, 2, 3 green, you might get stopped, okay? So here you'd have your stop loss above the last point, price broke above and held. So the last candle, which would be 1286, so 33 pip stop loss, okay? But if you moved it to break even, okay, and it come up, took that, very frustrating, and carried on. Doesn't matter, okay? It doesn't matter. What you're looking at is 1, 2, 3 candles below, and you enter here as close to that wick. So what you would do then is if with a bit of luck, you've got your stop loss, so you're running 2 positions now when you enter down here. But say that first stop loss got done. Let's just say worst case it got taken. You then enter on 1, 2, 3, this third candle, red candle below. 1, 2, 2. Pricing comes down, bang. And what you're looking for, of course, to cut the profit is then 2 or 3 green candles, because that would then confirm price is going back up, if that makes sense. So for the short, you're looking for when price comes below the moving average, 3 red candles, rejecting the moving average, bang, comes down. Price comes up here, bang, sells, back again, sells, back again, sells. Here, you might have 3 green candles, which people refer to as 3 white soldiers, but we'll call it 3 green soldiers because we're using green candles. But you wouldn't have entered because you haven't got the 3 candles above the moving average. So whereas a lot of people, again, they teach you this in the courses, buy here, okay, buy and then bang, drops you, takes you out. Good night, takes your stop loss, bang, eats you. Price comes down, so price actually comes all the way down here. Huge move. 360, lovely jubbly. Have a bit of that. Pricing comes up, you wouldn't buy here. So just to remind you, you wouldn't buy here. You're not selling here. You're not trying to catch the tops and the bottoms. You're not going to get long here. There's no reason to. You haven't got the RSI divergence. So let's just deal with the fact we would not have got in long there, okay? Not interested. Doesn't matter. I'll show you why. Pricing comes up. We've got 1, 2 candles, 3 candles. That third candle is closed above is now green. So I think, yeah, okay, I want to get long now. Now, in all reality, looking at that, I might not have much confidence that that's going to go long. It is 3 candles and the third one's green, but I might not have confidence. So I might want to wait for this one. Okay. This is a huge candle, massive buy signal. Okay. So I might say, right, well, you know, arguably I could get in there, arguably, but, you know, just play it safe. I didn't get in there. I'm going to get in here. So I'm going to get in at 12,952. Okay. So I'm now looking at a run because price, I wouldn't have closed it here because that's one candle and then it gets taken straight out by green. I'm then looking, price actually comes all the way up here, 12,194. Okay. So you've got a nice 202 pip move. Okay, now I wouldn't necessarily close it there. There's no signal to close it. You could argue a bit of divergence. There is a bit. Now, I know you lot are better than me at this and you've got much smarter eyes. In reality, I might miss that. Okay, so what I would do, again, I'll wait for confirmation. 1, 2, 3. So worst case, right, I would have closed it on that third red candle. It's not ideal because I've missed a bit of profit. I'll give you that. But it's still 12,071. So again, I've made 120 pips. I've not tried catching the bottom. I've not tried catching the top. You know, I'm not worried. I'm waiting for confirmation. 120 pips, bang. Thank you very much. Okay. Now, this works all the way along, and I want to show you that bloody thing not moving. There we go. Okay, so at this point, you might have then shorted at this. It's third record 1, 2, 3 red candles. Get it up, bang, sell it down. 12,101. 12,034, but you might not have closed it there. So again, using the same principle, you got 1, 2, 3, this candle, okay? So you might have hit your stop loss, you might have broken even, you know, because once it's moved down, you move your stop loss, break even. Maybe you've done that, okay? Then you're saying, right, well, price has got 3 candles above, but I want to buy it on the next touch of the moving average. So price comes back down, get it here. This lovely green candle there would be your entry, because it's showing some support off there, 12,093. Okay, price comes slightly down, 20 pips down, but then the next candle's green, it starts the run up. So you, again, bang, comes all the way up to 12,286. So again, just under 200 pip profit. Again, you might not have caught at the top and be perfect, like these online gurus. So what you do is you just play it safe and you look for that third candle close. So we've got a big engulfing. Can you see the types of candles? When there's a trend change, see the types of candles. See the types of candles. Yeah, they're big, they're solid. 1, 2, 3, third red candle. So you've got 2 things here. You probably take your profit from this entry, 12,093. And then, okay, so you've missed 40 pips, but it doesn't matter because that's how you get confidence and let the trade run or cut it. And again, you would have flipped to sell 12,246, you know, 12,127 is potential, but you might not close it until it comes 1, 2, 3, this green candle. So the whole point is just give you an idea of entering. It works time and time again. You're looking for that third candle here. Okay, you wouldn't have got caught here because you got a 1 or 2, but the third is green. So you're not going to enter a short where there's a green candle with a wick below it, suggesting it's going up. You know, here on this bit at the end of the day, you've got a nice red candle that slices through it. 1, 2, and then you've got this third one. So you'd probably be coming in. So red, 2, 3. That next red one was coming from it. 3, 3, 8, and it comes down to 2, 4, 8. So 90 pips. So again, what you've got to look at there is your strategy might be different. You might say, well, I want to make £50 a day. £1 a pip, I'm looking for 1 50 pip move. So in here, you've got your divergence that will do that. You've got your moving average theory that will do that. This is just keeping it really, really simple. The great news with this, you'll wake up tomorrow and it makes no odds what's happened the day before on the price. It makes no odds about whatever the news want to come up with, you know, lockdowns, boring, Trump, Biden, boring, stimulus, boring. It doesn't matter. It makes no difference. If I just show you this tools and you look for divergence and you look for the moving average, Fibonacci is hugely impressive, but I think that just takes a bit more practice. You need to work with that. If you just look at these moving averages, again, the moving average just smooths out all the noise in the candlesticks. But if you keep looking for those third candles, go and back test it before you start risking real money. Go and back test it. Do it yourself. Try a day where you just use that strategy and see how you get on. Again, this is all about not picking tops and bottoms, not trying to be smarter than the market, because we will never beat the market. A bit of patience, a bit of waiting for the right moment, and the market will come to you. It will reward you massively. So I hope that helps. Just try and use that. Keep things simple. Make loads of money. Do some good reward, and we're all good. Right. Enjoy your evenings.